I gave $1,000 to 5 strangers. Not one had ever traded. Real people, real money, zero experience. No safety net. By the end, you'll know the one trait that separates winners from losers. One stranger did something I never expected. The winners found stillness. Stillness creates clarity. Clarity creates memory. Memory creates discipline. That's the very edge that determines everything. Results aren't guaranteed. This is purely educational. Watch till the end to see the insane outcome and your own reflection. 5 people, $5,000. One question, the rules were simple. Each stranger got $1,000. Same market access. Same time frame, no outside help. You know them, you've been them. Stranger 1, the gym bro. Chest out, jaw set. He didn't read the rules, he felt them. Stranger 2, the accountant, perched on his chair. He asked for the fee structure 3 times. Losing a penny was failure. Stranger 3, the college kid, bouncing his knee. He wanted a Lambo by Friday. Patience was a disease. Stranger 4, the introvert, quiet eyes. He moved like the market owed him nothing. Stranger 5, the emotional one, smiled too wide, then silent. His mood swung with every tick. Now here's the twist. I didn't tell them the real reason I was doing this. The real experiment wasn't about trading skill. It was a psychology test. I wanted to see how the mind distorts when real money is on the line. Fear, greed, ego. The market doesn't create those, it reveals them. Your strategy doesn't decide your P and L, your psychology pulls the trigger. Every time. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Without that, you're just a reaction machine. The environment was sterile, same screens, same data, same opening bell. The only variable was the 6 inches between their ears. Which one would you bet your money on? The muscle, the miser, the dreamer? Hold that thought because you'll be shocked. Same data, same capital, same rules. But 5 different minds create 5 different realities. Trading is like a mirror. It doesn't show you the market, it shows you yourself. Every impulse, every doubt, every hidden arrogance surfaces in the glow of a candlestick chart. You can't hide. The market strips you naked, and most people never look away long enough to see their own reflection. We gave them identical rigs, same execution speed, same calendar, no edge, no excuses. Yet each built a different story. The accountant saw a trap. The gym bro saw a challenge. The kid saw a lottery. The introvert saw a puzzle. The emotional one saw a drama. Same market. 5 movies. Within the first 24 hours, one stranger had already broken a rule. During the briefing, I laid out the rules with a flat voice. No emotion, no hints. The gym bro leaned back, arms crossed, smirking. The accountant wrote everything down, underlining twice. The college kid checked his phone 3 times as if fortune would text him. The introvert just nodded, absorbing. The emotional one asked about snacks, then laughed too loud. Same words, different filters. Your reaction to structure reveals your relationship with uncertainty. I told them, risk 1% per trade, wait for your setup, no revenge trading. Simple rules are a scalpel, and each psyche was the patient. The one I expected to fail immediately surprised everyone. Day 1, markets open, hands shaking. The first trade is never just a trade, it's a mirror. And for my 5 strangers, that mirror showed cracks they didn't know existed. You think you'll be calm, you aren't. Your body reacts before your brain does. The gym bro didn't even look at the chart. He saw a green candle and hit the buy button with his entire account. No stop loss, no plan, just raw physical action. For him, the market wasn't a system to be studied. It was a heavy weight to be lifted. That confidence feels like power, but in trading, unearned confidence is just a debt you haven't paid yet. You felt that, haven't you? That certainty before a loss. The accountant, the one with the spreadsheets and the perfect plan, froze. The cursor hovered over the buy button. His finger, usually so precise on a keyboard, felt like it was made of lead. His training told him to execute, his mind screamed opportunity, but his body refused to move. You know this feeling. It's the fear of being wrong after you've prepared so obsessively to be right. The market doesn't care about your credentials. It only cares if you can click the button. His logic was a shield, but under live fire, that shield became a prison. The thinking became the delay, and the delay became the loss. But it's what happened at the end of day one that revealed everything. The market closed, but the drama didn't. The college kid who was up a little checked his phone. The memecoin crashed 40% in after-hours trading. He couldn't sell. He was trapped, staring at a red number he couldn't escape. That's when the panic hit. The calm logic they all promised vanished. The accountant immediately sold a winning position the next morning, not based on strategy, but to lock in a tiny profit, terrified it would vanish just like the kids did. Panic selling isn't a decision. It's a reflex of the survival brain. By day 3, the leaderboard completely flipped. The person who made the least mistakes wasn't the smartest or the boldest. It was the one who simply survived the chaos. They didn't win big, but they didn't self-destruct. You see, the market is a device for transferring money from the impatient to the patient. The initial chaos of day 1 wasn't a money problem. It was a regulation problem. Their inability to manage their emotional state directly printed their losses. The market didn't beat them. Their own biology did. We hadn't even started the real lessons yet. Winning is the most dangerous thing that can happen to a beginner. Our gym bro hit a few early wins. His confidence inflated overnight. You felt it. Profits treating your account like free money, so you treat it the same. Traders call this the house money effect. You risk recklessly because it doesn't feel like your own cash anymore. You increase size, you skip the stop, you chase the rush. And this is exactly where most traders blow up their accounts. Trading wins trigger dopamine. Your brain starts craving the next hit like a gambler at a slot machine. You confuse a random outcome with skill, and the pattern repeats. Our college student turned $1,000 into $1,800 in 2 weeks. But instead of pausing, he thought, why stop now? He raised his size, ignored his plan, and refused to walk away. Have you ever made money on a trade, then immediately given it all back? That's not bad luck. That's a brain hijacked by winning. He had the chance to secure profits, pay a bill, lock in a life-changing night. But he kept pushing. The chart turned, but his ego wouldn't let him close. What he did next cost him everything, almost. He held through a reversal, added to a loser, and watched his account bleed from green to deep red in a single session. Now contrast that with the analytical introvert. He took partial profits early, moved his stop to break-even, and slept soundly. He protected capital first. While the gym bro was digging a hole, that introvert was methodically stacking small, boring wins. No drama, no euphoria, just a process. Meanwhile, the person I least expected was quietly building a fortune. Someone who never bragged about a trade, never chased the rocket, never let a win rewrite his rules. He understood something the others didn't. Every trade is a test of restraint. And his results, they came not from brilliance, but from the discipline to walk away when greed begged him to stay. That's revenge trading. One loss bleeds into a panicked, bigger bet, and suddenly a small scratch becomes a fatal wound. You cling to the safety of cash, only to watch the train leave the station without you, carrying your profits with. This checklist will be your anchor, removing impulsive doubt and forcing stillness before you risk a single dollar. Day 5, everything I predicted was wrong. The overconfident gym bro, the one who flexed his wins on day 1, was now down 40%. The quiet introvert, the one everyone ignored, was up 30%. But the real shock came from the person I'd already written off. You know the type, the cautious one who overanalyzes, who never pulls the trigger. That person on day 5 took a calculated trade, and it worked. Not because of luck, because they followed a plan while everyone else followed their feelings. The market doesn't reward confidence, it rewards stillness. Stillness creates clarity, clarity creates memory, memory creates discipline. And that discipline, not talent, separated the top from the bottom. You see, the leaderboard flipped overnight. The loudest voice was now the biggest loser. The quietest was building a fortress of wins. That's the thing. It's not about how you start, it's about how you adapt. That cautious accountant, the one who stayed on the sidelines, finally stepped in. He didn't act on a hunch, he acted on a rule. And when the trade worked, it wasn't a celebration. It was a quiet confirmation. You see, that's the breakthrough. Following rules beats following emotions every single time. The market is a teacher that charges tuition before the lesson. The introvert paid that tuition early, in small, quiet losses. The others were still trying to skip class. The difference was discipline, not intelligence, not courage, just the simple, boring, unshakable habit of doing what the plan said, not what the heart screamed. You take a painful loss, and then repeat it. It's not your fault. It's the method you were taught. Trust your gut. Your gut is a liar, the plan never lies, and that's why the quiet one kept winning. Here's what you need to understand. A trading plan is not a set of predictions. It's a set of rules for when you're wrong, and that's the antidote to emotion. What if I told you the winner had the worst returns on day one? The quiet one lost more trades than anyone that first day. But he lost small. He cut losses fast. He let winners run. Those slow, consistent decisions compounded into a lead that no one saw coming. Meanwhile, the emotional trader had a meltdown. He blew up his account, slammed his laptop, and quit, temporarily. He walked away because he couldn't face the fact that the market didn't care about his feelings. He thought he could outmuscle the market. But the market doesn't get tired. It doesn't get emotional. It just waits. And in that waiting, the disciplined trader compounds quietly. The emotional trader walked away, but the market didn't stop. And then something happened that no one saw coming. A news event, a sudden, violent spike that tested every trader in the room. It wasn't in any plan. It wasn't on any calendar. It was a pure, unfiltered moment of chaos. And in that moment, you could see who had built a foundation and who was standing on sand. The introvert didn't flinch. The gym bro, if he was still there, would have panicked. But the real test was about to reveal something deeper. This was the moment where true character gets exposed. Not the bravado of big wins, but the quiet, steady response to the unexpected. Because in trading, the only thing you can predict is that the unpredictable will happen. And when it does, your rules, not your reactions, save you. How they each reacted to that single moment revealed their entire future as traders. The introvert took a small, calculated loss and moved on. The emotional trader, still on the sidelines, saw the spike and felt regret. He'd have gone all in. The gym bro, if he'd stayed, would have doubled down. But the market didn't care. It never does. And that is the turning point. You see, day 5 wasn't about who made the most money. It was about who could survive the test. Because in this game, survival is the only victory. And the ones who survived, they didn't do it with genius. They did it with a plan. A plan they stuck to when the world went mad. That's the lesson. That's where we're headed next. So ask yourself, when chaos hits, what will you do? The answer decides your future. Then the market crashed. 5 mines revealed their true colors. In one 30-minute plunge, the index shed 6%. You watched your screen bleed crimson. She didn't flinch. Calmly scanning the noise, she adhered to her plan. She even bought the dip. That's emotional regulation under pressure, the trained ability to pause while your amygdala screams. Stillness creates clarity. Clarity creates memory. Memory creates discipline. A crash is a storm. Amateurs run, professionals build shelter beforehand. The accountant had done exactly that. Her excessive caution meant she was sitting in cash, and that fear saved her capital. The same trait that once paralyzed her now armored her. Context transforms a weakness into a shield. The decisions made in those 10 minutes determined the entire outcome. After the dust settled, the introvert and the accountant survived. The gym bro, student, and emotional trader were wiped. But the final results, they're even crazier than the crash. 2 weeks, 5 strangers. Here's exactly how it ended. The gym bro, full of confidence, opened huge positions. He lost over half his account in 2 trades, not because the market turned, but because his ego wouldn't let him admit a mistake. The college student rode a wild roller coaster. He'd double his money on a meme coin, then give it all back chasing the next one. He broke even, exhausted, empty-handed. You know that cycle, the wins that feel like luck, the losses that feel like betrayal. But the winner, you'd never guess by looking at them on day 1. The accountant, quiet, methodical. He didn't seek thrills. He took small, consistent gains, avoiding anything that could wipe him out. The emotional trader, nearly destroyed. One red candle sent her into a revenge spiral, doubling down, refusing to accept a loss. She finished with pennies. And the analytical introvert, the clear winner, up significantly, never once raising his pulse. In trading, the tortoise doesn't just beat the hare blows up. You watch the chart like a slot machine, but the market rewards the one who treats it like a business. Why did the winner win? It wasn't a secret indicator. He had discipline when others had impulse, patience when others had greed, a plan when others had hope, and emotional control when fear screamed at him to act. Stillness creates clarity. Clarity creates memory. Memory creates discipline. You feel the panic rise, the FOMO burn. He didn't. He sat, waited, and let the trade come to him. No forcing, no chasing. Notice something. The winner wasn't the smartest. So what made the difference? He said, I don't trade to be right, I trade to follow my system. If I lose following my plan, I'm still winning. You hear that? He detached his self-worth from any single trade. He didn't need to be the hero. He just executed. Loss became data, not a verdict on his intelligence. And it's a lesson you can apply to your trading starting today. Because the real win isn't the profit, it's who you become in the process. Next, you'll see exactly how to build that discipline into your own routine. You watch a stranger in the experiment freeze as the market drops. Panic whispers, get out. You felt it. That same paralysis hits you when red fills the screen. Another stranger dumps everything on a hunch, chasing a rally that never comes. You've done it too. The problem isn't you, it's the emotional wiring you never trained. Law 1. Master your emotions before you master the market. The winner didn't feel less fear, they breathed through it. The losers let impulse steer. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Without that, every chart is a trap. You take a painful loss, and 2 weeks later you make the exact same mistake because the feeling, not the system, drove the trade. The winner watched the same candles, felt the same adrenaline, but they had a protocol for the panic. Law 2 is the one that saved the winner during the crash. During the crash, the winner didn't guess. They had a plan, a single sheet of rules taped to the monitor. Law 2, always have a plan and stick to it. Discipline beats impulse every time. The other strangers traded on instinct and got shredded. You know the cycle. You win on a whim, feel brilliant, then give it back because the whim doesn't repeat. A plan removes the whim. But even the best plan fails without Law 3. Your first job as a trader isn't to make money, it's to survive. The winner defined maximum loss before entering any trade. Position sizing is simply asking, if this goes wrong, how much of my account can I afford to lose? Not the emotional pain, but the cold number, 1% or 0.5%. A stop loss is a preset line in the sand you never argue with. It's a promise to your future self. The winner treated capital like oxygen. Protect it first, profit second. The others treated it like lottery tickets. Law 3 in action. Risk management isn't about being cautious. It's about staying alive for the next setup. Now Law 4, the hardest psychological shift. Cut losses fast, let winners run. It sounds simple because it is. It feels impossible because your brain fights it. The losing strangers held losers hoping they'd turn around and sold winners too early out of relief. Why do beginners do the exact opposite? Because their brain is wired for it. Losing $1 hurts more than winning $1 feels good. That's loss aversion. Your mind screams, wait, it might come back, so you hold the loser. When you're ahead, it screams, take it before it vanishes, so you exit the winner. The winner did the counterintuitive thing. They killed ego and trusted the math. But knowing these laws isn't enough. You need to drill them until they're automatic. The winner didn't just read a checklist. They ran it 100 times in simulation until the pause before the trade became muscle memory. Your brain will fight you. Old habits will scream louder than logic. That's why you practice the rules until they're boring, until you trust the process more than your feelings. Stillness becomes the default, not the exception. In a moment, we'll break down exactly how to build that automatic discipline. So the next time the market tests you, your training kicks in before your doubt does. So what does giving $1,000 to 5 strangers really teach us? You watched them transform from emotional gamblers into disciplined minds. The gym bro blew up chasing revenge. The overthinker froze, then finally trusted his plan. The quiet observer simply waited, then executed without noise. They all started equal, same capital, same opportunity, but only one walked away with profit. This revealed the core truth. Trading success is 80% psychology, 20% strategy. You can know every pattern, yet lose when fear or greed hijacks your brain. But here's the part nobody tells you about this experiment. The strategies they used were almost identical. The edge was the same. The difference, how they handled their own internal chaos when money was on the line. This battle isn't just theirs. It's the same war you fight every time you click a button. You watch price move against you and your stomach tightens. You see a setup, but paralysis whispers, what if you're wrong? The winner in this experiment wasn't smarter or luckier. He simply understood that stillness creates clarity. Clarity creates memory. Memory creates discipline. And discipline creates consistency. The market is just a stage. Your psychology writes the script. You now possess the blueprint of what separates winners from losers. Of course, these results aren't guaranteed, and this was for educational purposes only. But the principles are timeless. You saw the before, chaos. You saw the after, calm precision. That shift lives inside you too. Mastering your mind is the highest ROI investment you'll ever make. Not another indicator, not a secret strategy, just you confronting your impulses in real time. The winners don't have a magic entry, they have a mirror. If this breakdown lit a spark, I need you to take action now. Hit like to anchor this lesson in your mind. Subscribe for more deep dives into the psychology that actually moves markets. And comment the word trading below. Typing that single word is your public commitment to yourself to trade with discipline from this moment forward. And because I want you to win, I've put 2 free gifts in the description. The 15-step checklist to use before every trade, and the risk management calculator so you never risk too much again. These tools remove emotion and protect your capital, so you trade like the winner, not the gym bro who blew up. In my next experiment, I gave them $10,000, and what happened will blow your mind. The pressures multiplied, but so did the clarity for one individual. That reveal is coming soon. For now, carry this with you. The best traders don't beat the market. They beat themselves, every single day. The market just reflects who you were when you placed the trade. So become the observer who waits, the quiet mind that executes without trembling, The disciplined soul who knows that true profit is not dollars extracted, but self-mastery deepened. You now have the map. The only question is whether you'll walk it. Stillness creates clarity. Clarity creates memory. Memory creates discipline. And that discipline is your freedom. See you in the next challenge.